Hey, what's up everyone? This is Silver Slayer. Welcome back for another video. Today we're talking about gold and silver being in a bubble. If it is or not, I would love to hear your feedback, your thoughts and opinions on this subject as well. I found a couple articles on this topic, and when I look for articles, I don't try to find just the average articles. I try to find pieces that have good points, that look from unique angles that maybe we've never thought about, to jog our memory, really challenge us and make us think outside the box. I think that's very key when, especially for investing or any asset that has multi levels to it, whether it's the economic aspect, whether it's the stocks, whether it's the government, whether it's speculation. So these articles I found are really interesting. I'm gonna go over this first one just to kind of help people understand what a bubble is, how it kind of moves, what are the different levels to it. So anyways, if you do enjoy this video, if you find it helpful, make sure to hit that thumbs up button. I will be doing pop-up giveaways from time to time for people who like the video and are subscribers. So if you want a chance to win some free silver, then make sure to like the video. But anyway, let's get into this. So it's talking about a price bubble. It says there are a number of ways to define a price bubble, also referred to as a speculative bubble, economic bubble, or asset bubble. The simplest definition says that a price bubble is an upward deviation of the market price from the asset's fundamental value. In other words, the bubble means an upward price movement over an extended range, which then implodes. So basically saying that no matter what the natural price or the actual value of something is, it's caught in this little bubble, or this little world. It's trapped in a price range and it won't fluctuate past that. Or sometimes it does when the bubble bursts, and you'll see a huge uprising or rally, like Bitcoin when it hit 20,000 last year, and then it corrects, and then it stays in this little bubble. So anyways, they're talking about the financial bubble, and it says what causes bubbles in a financial market. Economists are always divided, but most often point out the rise in money supply and low interest rates as main drivers of the speculative manias. Easy money, typical for the phase boom during the business cycle, feeds irrational exuberance, as Alan Greenspan called the asset bubbles. Low interest rates and cheap credit increases demand assets, triggering a rise in the price of assets in a continuous process, with the initial rise generating expectations of further rises and attracting new buyers. Thus, psychological factors as well as moral hazard also contribute to bubbles. So there's this like ecosystem of new people getting in that have weak hands, but also the hype that goes around an asset. So people buy in when they see it, when they see a correction or some type of bull run, then they sell, shoots the price down. Then when the price gets lower, people buy for cheap, and so it shoots the price back up. So there's just this machine factory type thing going on, and it's all speculative, but there is actual, there is a real natural flow to it, which is really interesting. And especially with Bitcoin, I made a lot of money with like that because I knew it was based off speculation. So I was thinking, how is the majority of people going to invest? And if you can think like the majority of the people, then you can really get an idea on what's going to happen. But if you don't, and you're stuck in your own little lens where you can't see out of your own perspective, then it's really easy to lose money. Anyways, they're talking about economic bubbles and gold. All bubbles have to burst. The easy money cannot last forever, and the market psychology changes. Investors have to learn how to profit during bubbles, but also how to prepare for the bust. One of the best ideas is to purchase gold, which is a good diversifier. The yellow metal has low or negative correlation with other assets, therefore usually gold shines when other asset markets crash. The best example is the Great Recession. After Lehman bankruptcy, the stock market bubble burst, which pushed the price of gold up. So this is interesting. This is why I always say gold and silver is definitely the safest asset. It has real intrinsic value, so no matter what the other markets are doing, gold will always stand true to what it does. It might have some speculation or some influence from the outside, but usually, looking back historically, gold and silver are pretty safe investments regardless of what's going on in the economy, and that's so key. So here's the main part of the video where I'm talking about. So it's talking about the gold bubble. Some people believe that the gold was in a speculative bubble in the second half of the 2000s, which burst in 2011. As you guys know, in 2011, gold or silver hit $50. The problem was detecting bubbles in the gold market that has no gold to yield. Therefore, it's practically impossible to assess gold's fundamental value. And that's really interesting. I made videos about this in the past. How can you say that the price of gold is too high when you do not have an internal benchmark? Moreover, it seems that the price of gold rallied because its fundamental drivers changed. In 2000, the US dollar was depreciating, reflecting the deteriorating fiscal position of the US. In 2008, stock markets collapsed. So it does make sense. And this says the price of gold declined. However, it did not fall to the level seen before its rally. Its main argument against the bubble existing it was gold in the 2000s. As when the bubble bursts, asset prices usually fall to true levels recorded prior to the beginning of the bubble. For example, it dropped in 2016 to its lowest point in 2009 when the bubble started. So even when the bubble does burst, it always usually does correct. It doesn't correct so far that it shoots lower than it was before this rally started. It's usually a correction. At least you'll make your money back if you bought during the natural phase. But in any bubble, there is ways to make money. Like, stock markets are completely a bubble, in my opinion. It's what company's doing good. You buy low, sell high, flip it when it corrects, or when it goes down, whatever. You buy more. When it goes up, you sell. When but gold and silver is a different market, and so is cryptocurrency. Cryptocurrency is real money. It's different than ETFs, options markets, and stocks. Cryptocurrency is a whole different ball game. There's other factors that weigh into it that I could make a whole video about, and I have made plenty of videos about, but it's a different market. So it's really whatever you're investing in, you have to really understand what that market does, how that market moves, and changes, and what the investors of that market do, or how they think, how they operate. But anyway, so we're gonna go to the second article I found. Anyways, it said this is a older article, I'm pretty sure, but it doesn't matter. It has nothing to do about the time frame. So anyways, this was November 7th, 2018. So it's saying, in 2010, commodities trader George Soros said gold is the ultimate bubble. He was referring to the asset bubble that occurs when speculators bid up prices of an investment beyond its intrinsic real value. Asset bubbles occurred in the housing in 2005, oil 2008, stocks in 2013. So they're saying that investors know what the real value, or the average value of whatever asset is. And what whales can do actually is sell off or buy huge amounts, influence the real price of it, and when it shoots down or shoots up, they either buy or sell. And they can, like when JP Morgan said Bitcoin was a scam, shot the price down. Well, we found out JP Morgan, once Bitcoin crashed, basically bought tons and tons and tons of Bitcoin for really cheap. So they manipulated this bubble for their own advantage or their own gains. And this is a thing that is very common. They're called whales in every market. But anyway, Soros argued that gold is the ultimate bubble. Unlike real estate, oil, or shares of corporations, it has very little fundamental value upon which is to base of realistic price, which is interesting. I don't say I could agree with that. Gold and silver has tons of fundamental value with the industrial use, technological, and medical world. Soros seemed like a fool when he said that, which is what I'm basically just saying. For another year, the price of gold soared, which I'm not surprised. It reached its all-time record of $1,895 on September 5th, 2011, which was a record peak of the bubble that burst. Unlike other investments, most of gold's value is not based on its contribution to society. People need housing to live. They need oil for gas. Need values of stocks, but that you cannot use that because we also need precious metals for all the technology that are going to make the cars. Silver is the most highly conductive metal for thermal conductivity and electricity. So, and it's colloidal silver is used in the medical world for water purification, several other vaccines, tons of stuff. We need gold and silver for tons for the laptop I'm making this video on, for the cell phones, for everything. So that does not make sense. For everyday life, gold and silver have just as much beneficial uses and properties for all these things. I know a lot of gold is used for jewelry, but silver, a lot of it is industrial and technological use. But anyways, but the biggest use of gold for luxury is for luxury items. Jewelry uses 52% of the gold mined each year, and industry uses 12%. I made videos on this. Yes, gold is more for jewelry, stuff like that, but silver is not. And he says, for this reason, Soros claimed gold was the most susceptible to the madness of the crowds, but he's not looking at silver, so I cannot agree with this statement. He's looking at one side of the fence. He bases observation on the theory of reflexivity. It says the price shaped perceptions of an asset's value as much as fundamentals do. It creates a loop where price increase shape perceptions. As the price rises, so do the fundamentals. The feedback loop comes from self-sustaining. The bubble inflates until it becomes unsustainable, which obviously we talked about already. But I think that this is an interesting argument. But I'm just gonna keep moving on. Why gold's bubble peaked in 2011? Talking about 1973 gold price were based on the gold standard, which I've talked about. Mandated the gold was worth $35 an ounce when President Nixon took America off the gold standard. That relationship disappeared. Since then, investors have bought gold for one of the three reasons: to hedge against inflation, which a lot of us do, as a safe haven against for economic uncertainty. That's more like preppers stuff. And then to hedge against the stock market crashes, which is, people who are diversifying that want some backup safety and security, which makes sense. So they're talking about the gold. The gold bull market began in 2000. Investors reacted to Y2K crisis, bursting stock market bubble, 9/11 attacks, dollar decline between 2002 and 2006. They bought more gold when the Federal Reserve's program of quantitative easing created inflation fears. 2010 investors worried about the impact of Obamacare. So just a whole bunch of fear, stuff like that. That always rallies. People get scared every time there's FUD or fear spread in the economy. People freak out and they go to precious metals because that is the safe, intrinsic way to store your money, just in case the dollar does collapse or the economy collapses, whatever. So it does make sense. But this is just talking about what how far gold prices could fall. I'll post both these articles in the description. I just wanted to go over that. What do you guys think about this? I think it's a very interesting argument. Very interesting points were made in both these articles. Like I said, I hope you guys did enjoy this video. If you did, make sure you give it a thumbs up. I would love to hear what you guys have to say about this, and make sure to also subscribe if you already haven't. This was Silver Slayer. I'll see you guys soon. Peace.